Traders, welcome back to our price session trading lesson. We're looking at S&P 500 M&A futures. The time frame is 2000 tick chart. And right now, the structure of the market started with bullish trend working higher. We have a market open and we have a push to new extreme. So uptrend played out. So right now, what I have to do is I need to analyze the overall market structure because I want to get ready for today's session and I want to understand where the market is heading and where are the right opportunities to enter. Okay, so the structure right now is pretty much sideways trend range, but we have some empty room at the bottom. It's a little bit too bullish. Let's see what's going to happen. We have additional push up, so it's definitely not really acting as a trend range as I would like. And we have another push back above EMA. So when I'm analyzing a structure like this, I can already feel that there is bullish bias present. You can definitely tell that the market is not selling off strongly. This is mainly an area of development where everything played out to the upside. So I'm not thinking about buying. But because we kept pushing higher, it's a little bit too bullish. We're back above EMA. I'm not selling as well. So I'm mainly waiting. Let's see what's going to happen. One leg break, second leg down. Downtrend played out. And we have a push above EMA. So right now what I like doing is I like drawing small support because this is typical structure where you have slight bullish imbalance. That there can be small trend range drawn at the top of the bigger one. The reason why I'm drawing trend range is because we're going sideways. We have flat EMA, consistent price swings up and down. Now, this structure is not really easy to trade. It's still being established, but let's see what's going to happen. Definitely negating any bearish bias because the downtrend just played out. Massive push above EMA. Can I sell here? I have a second entry short. Can I sell? Of course not, because you traded strongly into this, okay? This is such a tiny break. This move looks too bullish, but because you traded up, I'm not really thinking about selling. Remember, this is just a secondary trend range. You can see how we are trading higher slowly but surely. So I'm not thinking about selling. I just need to be patient. Once again, the push is quite clean and market keeps working hard like this. So when I'm watching this, I want to explain why the market continues to go higher. So what I like doing, I like drawing some bigger channel, something like this, because I'm getting some confirmation here, market geometry. This channel is a little bit too broad to my liking, okay? When I'm watching channel like this, where you have spike up, broad consolidation, spike up, I still prefer to get some stronger push phase confirmation. Basically, the higher you're gonna go and more price swings you're gonna have inside of this channel, the more you can trust it, okay? But I'm trying to explain why market keeps going higher. So I like drawing this channel, still just a potential channel. Let's see what's going to hold. Market is working higher. We have some overshoot. Okay, so this channel right now has overshoot, which means we can have stronger correction in the opposite direction. So right now I'm going to be careful. I'm not going to be buying at the EMA. You can see that this is not a healthy trend. Okay, this is just spike up, broad break, second spike up. Healthy consistent trend is consistent series of lower highs and low, higher highs and higher lows. So already overshoot again. So this channel was not really confirmed. And let alone now that we have overshoot, so I have to be careful about buying at the EMA. So no trade here, inside bar anyway. Market is correcting, so I'm not looking to go long, but also I'm not selling because we traded up into this. I'm going to draw downtrend like this. We have overshoot. I'm going to redraw uptrend working higher like this, so you can have stronger push up. Okay, we are back above EMA again. And right now when I'm watching this, if I'm going to take a look at 10,000 tick chart, I can see that there is slightly better channel alternative. I'm going to delete this temporarily and I'm going to draw channel like this, and you can see this fits much better. This is why I like using higher time frame 10,000 tick chart, because I have confirmation here, so I'm going to copy it. But at the top, this channel fits a little bit better, so I like focusing on this channel simply because I can see market reacting here. It aligns with the higher time frame 10,000 tick chart, which is very similar basically to 5-minute chart. So right now, prices are correcting. So now I'm thinking about second entry long, okay? The downtrend has an attempt to test the new extreme, but the attempt failed because there's a key entry point and you had overshoot and it's against the main bias. And we have a new high for a entry long, pull back. So I'm thinking about second entry long at the EMA. Can I get it? I can, but there was no trigger. There was no break above this bullish bar, which means I cannot enter. There is no trigger, and even a close quite far up Had it close halfway into this bar lower here, would have been great setup, second entry long, but too big and no trigger anyway. And now you have first entry short, second entry short failure. Okay. Now this is pretty interesting setup because this one bar is not fully at the EMA, but you traded lower, touched the EMA again, and reversed higher, creating one tail here, second tail here. So you can see bullish rejection here and bullish rejection again. Felt second entry short, the uptrend held. This is a decent high probability setup, felt second entry short. It's also a continuation of the second entry long. The market keeps working higher, and we have strong push phase working higher. Okay, so this trend looks like it's holding nicely. The bias is still bullish. Let's see what's gonna happen. We're so far from the EMA, I cannot go long, and EMA didn't hold. So I cannot go long below EMA. I was thinking there can be something at the EMA, but no, we broke below. This is a very weak uptrend. What does it mean? It means that the correction phase is very strong, okay? Strong trends are characterized by a lot of small bars, just slowly but surely working higher, minimal pullbacks. Here, the pullbacks are strong. You can see deep pullback here, deep pullback here, deep pullback here. This is very weak uptrend, not that strong at all. So I cannot go long below EMA. In order for me to go long and resume a brand new push phase, okay, I want to see push above EMA, just like here. Because I don't know simply how many pushes low there's going to be since we are still below EMA. The push above EMA with a failed second entry short, new low, first entry short, pullback, second entry short failure would be a good sign that a brand new push phase is resuming. There is no failed second entry short. You can't take high low here because it's mainly below EMA. It's not confirming anything. You really need a push above EMA with a failed second entry short. Market is trending lower. I'm not taking anything. It's too bearish. Market keeps working lower, keeps working lower. I'm going to redraw wider channel like this, and now we have FOMC announcement very soon, so you don't want to be trading at least 30 minutes before and like 15-20 minutes after, because there can be massive spike in volatility. You can see the announcement FOMC is out, spike in volatility, downtrend played out with the break push to the extreme, and market is working hard. So now if I'm going to zoom out, what is the bias? Okay, I like still thinking bullish because this uptrend needs to get new high. Downtrend played out, and we have massive spike above EMA, pullback, another spike above EMA. Definitely on 10,000 tick chart, it looks good for bulls. So when I'm analyzing pure price action, I'm predicting bullish bias. Okay, I don't need any other indicator. I can predict what's going to happen based on this structure. You can see it looks consistent, uptrend working higher. There is confirmation. This was prolonged, bearish pressure break new low, and you're back above EMA. This is confirming that the uptrend needs to get new high. So we expect new high to be tested. Now normally when the main channel to the left needs new high, what we also like doing is drawing secondary channel, something like this, because you want to be taking long opportunities off of this channel while the main channel needs new high. Okay, so we can draw wider channel with the direction of the trend, but we don't really draw wider corrections against the main trend. But this one looked too broad, one leg broad break, second leg up. So it doesn't really fit that well. We need a little bit more information, but let's see what's going to happen. Okay, market continues to go higher, and this actually confirmed the channel. I just need to adjust it a little bit because we have spike in volatility here. So I can draw some channel, something like this. When we bounce off of this channel and we pushed above EMA, what you're looking for is a high low confirmation setup. By the way, you have a second entry long, but you can't take it because the downtrend is in play. The downtrend is in play, and we need to get some high low confirmation setup. 2 legs down to the key entry point. I want to see high low confirmation setup above the EMA to confirm that we're going higher, but there was no high low, and market keeps going higher. Now, the main trend played out with the break and pushed a new high. You can see this high outside the channel is higher than this high prior to break inside the channel. So now what I'm going to do is I'm going to pause looking to go long just to be safe. Okay, yes, you have the secondary channel, but this is a secondary channel, not as strong and important. So because the main channel played out, I'm definitely going to wait a little bit before I'm going to start buying, because what if there's going to be stronger correction? So we have some pullback to the EMA. I cannot go long. I cannot go long. Even though it's still like a pullback, we are not pattern traders. The main trend just played out. It just reached new high. So I need more information that the secondary channel is going to take over and the market is still bullish. Market is working higher and we keep working higher. Okay, so another significant push up is telling me, okay, it looks like the secondary channel is still valid. There is still some residual bullish momentum. Another strong push is working higher. Okay, and market keeps going higher without significant pullback, and we have overshoot. You can see massive overshoot. I'm gonna extend this secondary channel like this. There was really no good trading opportunity for us to go long because you have only first entries far from the EMA. Now you have overshoot. If I'm going to really zoom out, I can see that I have one leg break, second leg. Now this right here is the secondary channel to our first leg. So these secondary channels are not as significant, but because it kept holding and this is such a strong bullish pressure, I was still expecting after break of this channel to get new high tested. Right now I cannot go long because we have overshoot, so we can expect stronger correction. Overshoot is overbought area and we can break or even reverse the market. So we broke the trend line. I was now looking for a failed second entry short above EMA. The market kept pushing lower. We are working higher. We are back below the exponential moving average. I have a failed second entry short, but it's below EMA, and also I can draw a slightly wider channel like this. I can't go long, push above, small uptrend played out, and now the market is about to close. Traders are taking profits. So this is the overall structure for today. Once again, today was very slow and choppy day because it was FOMC announcement day. These days are very slow and not that eventful. At least yesterday we had nice price action with decent setups. Today I see only one great setup here, one setup that follows the rules, and then we simply didn't have that many trading opportunities. So typical FOMC announcement day, just make sure you're not going to trade like 30 minutes to hour before the FOMC and right after the news are out. You also need to get like 15-20 minutes because there can still be spike in volatility. But today it was very calm and you actually can start trading quickly after the news came out. So it's going to be a short lesson today, nothing really much to talk about. Slow uptrend working higher. It's a shame you don't get high low here or high low here. Just no good setups here. So I didn't take any setup today, but it is pretty normal during FOMC announcement day. So I'm going to wrap it up. I hope you have a good trading day. I'm going to talk to you next time. Good luck at your trading.